Hello. Welcome to another video from 10x Investor Education. In this video is a different thing I'm going to cover. Okay. So this is about passive real estate investing, and the company is known as Fundrise. Okay. I talked about this company multiple times before, even after COVID pandemic, how the results were. Okay. This year, this is after a long time I'm doing this video, and they had a fantastic quarter 2 and quarter 3. Okay, I will go through the results in a minute. I will show you my whole portfolio, where I started a couple of years back and how much I'm generating every month, every quarter. Okay, so as related to passive income, I mentioned Voyager Digital multiple times on this channel. Okay, so you can invest crypto as well as altcoins through Voyager Digital. You can get 9% interest on USDC and different percentage income interest on Bitcoin, Cardano, and other altcoins. So if you use referral link bottom of the video, you will get $25 free BTC. So that is one. After thorough research of a lot of companies, I went with Voyager Digital. Similarly, Fundrise. So Voyager Digital is one way I generate passive income. Literally, I just invest and then forget it. Fundrise, this is like third or my fourth year that I have been investing. So I generate considerable amount of passive income through Fundrise real estate. So if you are looking for a passive real estate income without want to owning a property and headaches, there are multiple ways you can invest into real estate. Okay, the most famous way of investing is Vanguard real estate ETF, known as VNQ. Remember, that is trades like a stock, and after COVID, during COVID, like other stocks, that also went down by close to 40 or 45%. Obviously, it came back. I'm just telling you that is how it was. But whereas Fundrise, even during COVID pandemic, it didn't even go negative for any REIT, even 1%. Okay, everything was positive. The only thing that I saw the change was they used to pay me 2% quarterly interest. I got 1.5%. I'm still happy. So that is the reason why in my view, this is one of the safest. There were a lot of REITs like Fundrise, and a lot of them they lost last year a lot of money, because a lot of them they invested into commercial real estate, hotels and other things. But as you guys know, because of COVID, a lot of them lost value, because a lot of people were working from home and there was not a demand for commercial real estate and also hotels and other things. Okay, so what is Fundrise? Why did I choose this instead of a lot of other companies? Okay, so some of these REITs in quarter 3, not the whole year, in just quarter 3, so have given me 20% appreciation. So typically growth stocks gives like that 15-20% in a quarter, not the whole year. Okay, but just in quarter, some of these REITs return 20% on top of 2 to 8% dividends they pay. So you can calculate. I will show you my portfolio actual results, and I'll show you why Fundrise achieved this kind of results this couple of quarters. And also in this video, I will show multiple tips and tricks on choosing Fundrise. So Fundrise, they classify investors as 3 types. One is basic. So if you start with $1,000 investment, you are considered as a basic investor. So you cannot choose what REITs that you can invest. So they will choose for you something interval, Fundrise interval fund, which is not bad, but still you cannot choose. So if you're an advanced investor, which means you invest more than $10,000, then you can choose available REITs. If you're a premium investor, $100,000 plus, then there are other benefits. Okay, so in bottom of the video I have included link for Fundrise. I do not get any money through referral. Okay, you will save some fees if you use that link for 6 months or so. So if you are interested in real estate, you can research, but this is one of the safest passive income I have found in the last 3-4 years. Not in a single month or a single quarter they did not go down. Okay, so the reason I like Fundrise is they are very conservative with money, and they are looking for to go into also IPOs. So if there is a bad reputation and if users are losing money, they will be, they'll have bad IPO. So on average, the returns last couple of years and couple of quarters has been really good. I'm very happy, and I started with $2,000, and then I generate very considerable income. Right now I'll show in the middle and also show what they are talking about, why they achieved so much good results. Let me share my screen and show. They came up with this publication letter, October 1st, 2021. Q3 performance update, a quarter of remarkable results. Okay, so before even going through the quarter, let me show you the results for this quarter. So Heartland REIT, where I invested a bunch of money, is up for this quarter 16.37%. Growth E-REIT 21%. Balanced E-REIT 13-14%. So they appreciated a lot. Okay, so in this article they talk about why they appreciated so much. Okay, multiple reasons. So the one thing is outside rent increases. So because of the pandemic spikes in demand and combined growth, there is a short supply of housing, especially in southeast, and the apartment rents went up a lot that they invested in, and also the valuations went up a lot. So that caused rent increases, and that caused actually their income increase also. So Sun Belt growth. So this is what I am talking about. So there are multiple funds, REITs you can invest into. You can invest into West Coast, you can invest into middle of the US, you can invest into south or southeast or north, multiple places you can choose. And then basically the last couple of quarters, what they saw was Sun Belt growth. Okay, the reason for Sun Belt growth, you typically think California, New York are very expensive and they really grow properties value. Okay, but after COVID-19 things have changed. So because of the remote working, it became more attractive for the people to move to states like Texas, Florida, South Carolina, North Carolina, the states where their state income tax is 0 or very, very low and better real estate values. So that is the reason the appreciation in the states have been really good. Those are known as Sun Belt growth. And not only that, low interest rates that kept keeping demand for real estate and cash flow, and that increased the institutional demand as well. Okay, so this is how the rent growth happened historically. And then looking at what they are saying is, don't choose places like Los Angeles, DC, where actually the real estate prices appreciation will not be that much compared to Sun Belt. Remote work is one of the primary reason, and summary is what they are saying is they cannot guarantee that this results will continue, but based on their estimates, they are saying Sun Belt will continue still grow, not just last 1 or 2 quarters. For next couple of years, it will still grow, and there will be a lot of demand for real estate. Let me show you my portfolio, how it is, and what I have been earning. Okay, so this is Fundrise. This is my portfolio. As I told, you can check in my last video. And also I started around with $2,000, and every month I have been investing, and it has been continuously growing. This is just 2021, around $3,000 dividend and $5,400 appreciation. After fees, around $8,300 return. And beginning of the year, my balance is around 70,000. If you compare at the end, this is close to 12% return already. And I'm expecting another 4 to 5% return, or at least 6% return by end of the year, close to 20%. So this is literally 15 to 20% passive income in a year. So you can choose multiple goals, long-term growth or short-term growth. I will show you. If you go and look at it, and if you go settings, you will see how you can choose. So if you go to settings, then you can pick dividend reinvestment as well as investment plan. Depending upon what you choose, they'll invest your money accordingly. Supplemental income means they mostly invest into income generating properties. Balanced means they'll invest into growth, some and some income generation. Long-term growth means they will not consider you that you are looking for a passive income. They actually keep you in most of the growth properties. Okay. So coming back to the account. So if you look at here, performance. So some of the REITs that I invested into. So this is quarter 3, which just ended September 30th, and partial quarter 4. So as you can see here, growth E-REIT generated 19% appreciation, Heartland E-REIT 19%. So year to date, 27%, 32%, 21%. So these are very, very low risk in my view compared to day-to-day stock market fluctuations. And as I said, I just invest and forget it and keep investing into it. And I have never lost into any REIT. I'm not saying this is not a financial advice, and I'm not promising that real estate will not crash, you will not lose money. But at the same time, investment comes with risks. I'm ready to take a risk based on the growth and real estate. And real estate is actually a real properties. So these are not like meme stocks where there's no value. So I certainly love investing in real estate, and this has been one of my good passive safest income. Okay, the next thing I want to show you is, okay, so suppose you like this growth E-REIT. So why did growth E-REIT return 20% in last quarter? Let's look into why it returned 20%. So if you click on growth E-REIT, and then if you click on fund details, okay, so if you look at here, what growth in, so this growth REIT is not typically income generation real estate REIT. So, but still they're giving you 2.5% dividend per year, and every REIT started with $10. Now, last couple of years, the growth REIT went up by 70%. That's the reason why you see $17. So typically 70% returns in few years, you only see stock market, but this you can also get it from real estate passive income. So if you look at here, you can see quarter, July and August and September, how the NAV appreciated. And you can also see for the last couple of years how it's appreciated. The main thing, the way you select is, they have been talking about Sun Belt growth. Okay, so Sun Belt could be Georgia, Florida, Texas, North Carolina, South Carolina, where people are moving to those states and where appreciation of actually real estate happening. As you can see here, Texas, Georgia, Jacksonville, Florida. These properties, they actually send a separate letter showing that, for example, they invested $32 million. So Core Plus. So this just invested in, after a year of investment, the appreciation of these apartments, when they refurbish these apartments by investing this much money, the appreciation of apartments almost went up by 50% in a year, and they sent us through a separate newsletter. So because of some of this growth, so as you can see, apartment, stabilized apartments. So most of it is in Sun Belt, North Carolina, Texas, Florida. So this is how you can select the fund that you are interested. At the same time, when you click here, so if you can see here, so some funds do not take money. So some funds, they are full, they don't need any new money. but some funds can take money. So if you click here, you can make direct investment. So I am an advanced user. So if you start, if the $500 or $1,000, it'll be a starter or basic. You will not get this link to invest. Since I'm advanced investor, so I can click on this link. I can choose and then invest into how much money I want. Okay, automatically directed, and from next day onwards, I will start getting 2.5% interest, and also whatever the growth that is coming. That is how it works. Okay, that is how you choose. So for example, here let's look into another fund, Heartland E-REIT. Okay, so you can see here the West Coast E-REIT, the returns are not good. Okay, so similarly, if you choose, if you are not a basic investor, they automatically put you into interval fund. Okay, that's what they'll put you. So let's say you want to generate income. Okay, so one of the fund I invested for income generation is Income E-REIT 2019. As you can see, the growth is not good, but as you can see here, so the details of the fund, so you can still, there is direct investments available, and mostly this is, as you can see, the NAV never appreciated, but the current dividend yield is around 9% you get every year. And as you can see here, this is also income generating apartments mostly. Okay, so that is the reason why this is, they invested for as income. So they bought these apartments, and what are the income generation happens through this. This is fixed income, so that is how they get income and they share with us. And similarly, if you look at here, another fund I'm talking about is Heartland E-REIT, which is also another one of my favorite, which generated 32% for the year. And as you can see here, you will see similar properties. So Heartland E-REIT, you can still invest and you can get 4% return, and then it invests Heartland part of the US, such as Dallas, Las Vegas, Raleigh, Denver, and other parts. So again, as you can see here, you can see mostly there is some commercial real estate, but mostly apartments or new homes development. Okay, so this particular fund invests fixed income 18%, core plus 48%, and value at 32%. So this is how they classify their funds, and then you can pick what funds you want to invest into based on your level. Okay, so this, if you just, you can use my link, you can start an account, you can just start with $500 and they'll put you in interval fund. Okay, these REITs used to have a lot of regulations, like you cannot withdraw funds for almost 2 or 3 years. Again, this is not like stocks where you can buy today and sell tomorrow. This is, they look for long-term investment. So with interval fund, they change the regulations. They are not like a REIT. You can almost invest, you can change this, you can see the changes daily instead of monthly, and you can almost invest anytime. You can take the money out anytime, and the regulations are very, very less. So if you're an advanced investor, let us say you are 65 years old, you don't want to invest into growth, you can pick income properties. But if you are like 30-40 years old, where you can have time to take risk, then you invest in growth properties, growth REITs. So that way you can wait for a couple of years and see, get the appreciation. Okay, so if you try to sell my money in this Heartland E-REIT for this year, I already generated 32%, I can sell. But my goal is not to sell. My goal is, again, generate income, especially passive income. The other thing I want to tell you is there is an option for you settings. So if you go look at it, dividend reinvestment, you can choose dividend reinvestment. I disabled it on purpose. So you can enable if you want to. The reason is, if you enable dividend investment, then you don't have control of what funds to invest into. They will decide and they invest into those funds. So this way I can get those funds directly, this dividends every quarter to my bank account. Then from the bank account, I can choose, I can pick what funds I want to invest. For example, West Coast e-Rist does not growing up, and that doesn't give me a lot of income. So I don't want them to choose West Coast e-Rist. If I'm on income, I will choose income e-Rist, or if I want to choose growth e-Rist. So this way I'll get better options to select the REITs rather than they themselves selecting. So hopefully this video helps you to know more about Fundrise, passive income, and their approach. Please click the like button and please subscribe if you are first time here. As I said, you can follow the link of Fundrise and you can waive fees for like close to 6 months if you follow the link. Again, as I said, I don't get any income if you follow and open the link with Fundrise. At the same time, you will save some money. So hopefully you like the video, and this is for the people who doesn't want to own properties and headaches, but want to invest into real estate and generate passive income and real estate appreciation at the same time. Thank you. Have a great day and see you on my next video.